All right. So just let me know in chat if you can see my screen or can now see my screen. Okay.
Yeah, we can.
All right. Cool. One more second, guys. Drop this one more place. Oh, sorry about that. All right, guys. Thank you for joining me. Today's we're gonna be talking about the Fibonacci again. It's meant to build on the first Fibonacci class. That last class is more for beginners, kind of an introductory class. This is going to be more of a advanced class, part two. We're going to be going over the other Fibonacci levels. We're going to be going over the extensions, and we're going to be going over how to trade impulsive legs, which is my personal favorite way to use the Fibonacci. I find great success using the impulsive leg um, Fibonacci, and most of my trades do come from the impulsive leg Fibonacci strategy. So I'm really excited to share that with you guys today. Let's see here. Fill up my lead bowl here. How's it going? Yo, yo. All right. So I have the chat up on my other screen here. So if you have any questions or you want to unmute yourselves, that's fine too. I'll have it open at all times for you guys. All right. So without further ado, let's go ahead and start. So yeah, Fibonacci part two. We're going over the other levels, the extensions, and how to trade impulsive legs. All right. All right. So in TA, the Fibonacci retracement levels, they indicate key areas where a stock likes to reverse or pull back to. In this strategy, the impulsive leg strategy, we're looking to get in on the pullbacks. That's really what the whole Fibonacci strategy is about, is getting in on the pullbacks. So the levels are the 0.236 right here. This is a slight pullback, right? So price goes up and it pulls back to 0.236. That's a really slight pullback. The 0.382, that's a more of a shallow pullback. It's a good level. The 0.5, this is officially when we are entering a discount zone on the pullback. So say price went up here and now it's slowly coming down and it's right here at 0.5. We're officially at a discount for calls. The market is telling you we want to go call because it's going up, but we don't want to get in. We don't want to chase these candles. We want to wait for a pullback. We want to wait for people to take profits and get in on here, here, or really right here at the 0.5. Once you reach the 0.618, this is my personal target to get in long, the 618. This is a very deep pullback. Think about it like a 61% discount on your calls or a 61% discount on your long position. So you want to get the best discount possible, right? To me, personally, is the 0.618. That's always going to be my entry level. We also have the 0.786. This is going to be your deepest pullback. This is when a lot of people might start to say, rally is over or the sell-off is over, this or that. But really, you'll see it happen a lot. You'll start catching buys around here and then just take off. The last level is a 0.9. If you can get your long position here, this is going to be the best risk to reward because your stop loss will just be right here, right where the move started, the swing low, right? It's going to be right here. This is going to give you the best risk to reward if you get your position here. It's very rare you'll get your position here. And I know I tend to do it a lot, but don't count on it coming down here every single time. Really, you should be happy with getting your position at the 0.618 ideally and making your stop right down here. All right. Hold on, that's something to try here. 55th, exactly. Oh yeah, so the key thing to remember is when a stock makes a gigantic move to the upside or downside, it likes to retrace that amount by a certain amount. And that's what the Fibonacci is for, right? It helps you find those levels where the price is going to retrace to. Again, the 0.5, the 0.618, or the 0.786 on really strong trending days. You'll also see it pull back to nothing but the 0.236 before taking off again. So that is why we're going to be talking about these levels today. All right. Any questions before I keep going? All right. Looks like we are good. Again, you can feel free to unmute yourself and all that good stuff when you think a little. All right. These before and after pictures. All right, so what we have in front of us is SPY. This is a before picture. So what happened here is SPY made a huge move to the upside. At the same time, it took out all this resistance right here. So what we went ahead and did is throw Fibonacci from the bottom to the top right here, the swing low to the swing high. Once we draw the Fibonacci from the swing low to the swing high, this is the range that we are playing. So price is coming down, and notice that it actually did catch a buy here at the 0.32 level, and then finally came down here at the 0.5 level, right? So this is where we're gonna get filled long at, ideally the 0.5. So again, price. Sorry, go ahead. No, okay. So again, price made a huge move to the upside. This is an impulsive move to the upside because it killed this resistance like it wasn't even there, right? So again, we draw it from here to here. We're expecting the move to continue upwards, right? All right. Bam. So again, that's exactly what happened. So again, we drew our Fibonacci from the swing low to the swing high, and we did that because it made an impulsive move up. Again, because this is an impulsive move up because it's breaking these resistances, right? In a pretty strong manner. Like it's kind of breaking it like it isn't even there, it's barely catching resistance. We got filled long at the 0.5 and just completely took off, did not look back, right? Here's the first pullback. We pulled back to the 0.236. Now, this is a trade that I would take if I didn't take this one. Why would I take this trade? Because we're in a zone. I don't normally take 236 or 382 trades if we're in the middle. I normally only take them if we're in a zone and price really looks like it's facing out at like a 236 level, which is exactly what it did here. We came down, we pulled back, came down to 236, touched it to a penny, and continued taking off, right? So this Fibonacci gave you two potential entries. This 0.5 right here and this 0.236 right here. I like this entry a lot because it happened in a zone and we're in an uptrend now. Again, we're in an uptrend because this impulsive move, bam, killed all these resistances, and we continue to just keep, breaking these highs, right? Issue here. All right, any questions before I go on here? I think, oh yeah, I think we're gonna go ahead and hop on the charts. So for these ones, I don't have any spots in the chart marked out. I just kind of find it on the chart. I'll just find a spot on the chart. Luckily, I mean, the Fibonacci, you guys already know it happens. It just happens all the time. This might have actually been, no, it wasn't. Okay. So we had this huge move down. Oh, I think we traded these. We traded this actually. So let's do it on that. So we have this huge move down, right? And we draw the Fibonacci. So we'll draw the Fibonacci from the swing high right here to the swing low. Oh man, I'm actually it's live right there. All right. So prices now we make this huge move up, and like I said, price likes to retrace this. It needs to retrace some of this move. It can't just keep going, right? So we retrace. The first place we sell off at is the 0.618. So, and I believe I took this trade as well. I think I took this trade live actually. So bam, we get the first sell at the 0.618. We sell off to the 0.382. So not that big of a, nothing too crazy there. We go forward. Right here. So we catch another sell off the 0.618, but again, nothing too crazy. And then right here, we get our final sell off of the day at the 0.786. All right, now we come down and you can take your profit. These are now potential profit areas, the 0.382, the 0.236, because as you can see, when we sold off, we just sold off to these levels, right? We sold off to the 0.32 through 36, right? This is where we're going to catch a bounce. And look how it also lines up. See how it lines up with support. So we bounce around here, the 0.236 at 0.382 level, and then finally just sell off for the rest of the day. So this 0.786 level caught the top. This impulsive leg. This is the only Fibonacci here for the entire day. And you can see right here, even at the 382, you could have right here. This is the 5-minute. I don't want to switch time frames now, but this looks like a gigantic bear flag. Where's my ray at? See, you get this consolidation between the 382, 230, the 236, 382 level. So this is another short entry, right? And I do see myself taking this because this is actually an A+ setup for me. We come down, we break my zone, and we come up and retest it. So this is a short entry to me right here. And I would have had to sit through some chop, and I might have actually been stopped out. But then it just continues on, right? Again, these 382, 236 levels, this bear flagging in between these two levels, that's just adding confidence to my short trade, right? So this Fibonacci give you two entries to go short. Right here, the 786, if you were able to get in there, or this bear flag right here between the 382 and the 236, right? And then bam, the rest of the day, we're just gone. That was a fun day. Let's keep going. I'm gonna find another example. I'm sorry, my trading is going so slow today. What's going on? Any questions? No, okay. Okay, so here's another one. So right off over, we're kind of just chopping around here. We're chopping, we're chopping, we're chopping. And then finally we make an impulse move down. Again, this is an impulse move because it's sliced through all of this support like it's not even there, right? So that is an impulsive move down. What we're going to do is draw Fibonacci from the top of that impulsive move to the bottom of that impulsive move. And we're going to wait for our entries at the 0.618, 0.5, or 0.786. So as the day goes on, we're extending, and then finally, oh, now I'm mad. That's fine. There we go. We're extending, and finally we catch our sell-off at not only the 618, but also this supply zone. So that's two confluences to go short, right? Not only that, I know BW's in here, but I do see this fair value gap right here. You see that? So, bam, impulsive move down. Like I said, price likes to retrace these impulsive moves. It's healthy for price to retrace. It's just healthy profit taking. And people like us, we want to get in short as well. but we don't want to chase any of these candles short. We want it at a good risk to reward spot, right? So we wait for our spot here at the 0.618. Now we got a doji, we got the fair value gap, we got a supply zone. I think it's pretty safe to go ahead and go short here. Your stop could be the 786 or 0.9, or the safest stop is going to be the swing high right up here, right? Depending on your account size, you can take the risk all the way up here. You can take the risk. It's going to be depending on how you want to keep your risk. But really, if you get your position here, you're good right here. Now let's keep going. And again, here's that 382 level, 236 level again. Say you miss this move, extend it, and see where we start getting our next sell off from. Like we pull back 236, sell off from there. Again, we come back up. Let's extend it. Again, I'm not going to move my Fibonacci to a new swing low because I'm just trading this single impulsive leg. From here to here, this is what I'm trading, right? So we pull back again to the 0.382. See how you can get entries off the 0.382 and 236 as long as the setup is A+. This setup is A+ to me because we're in a downtrend. We can't make new highs, and we keep putting in these bearish candles at these Fibonacci levels. So again, best entry was right here, but the 236, 382 levels, they tend to have your back as well. I'll only take these trades if I have a bunch of more conflicts on my side. But again, these levels are also important. They're also important so you can be aware of where we're going to pull back to. You won't be like, okay, say we come down here, you're not going to say, okay, this sell-off is over just because we're starting to go up now. You know that we have the 236. You know that we have the 382. So these are resistance levels now. You see that? And we sell off from there. So again, 2 entries off this one impulsive leg. All right. So I got some stuff in the chat here. Yeah, absolutely. So if you guys don't have it, I also have these settings pinned to my channel in supply and demand, but I'll drop my Fib settings right now. If anyone needs take a screenshot of that, these are the Fibonacci settings that I have. I'll let people take a screenshot, and I'm gonna take a little. Oh, Taylor. Oh, never mind. All right. All right. Perfect. Let's keep going now. Talking on my phone. Let's go back to the top. All right, so now let's talk about the extensions. So the extensions are used, I primarily use them as profit targets. This is how you can estimate how far price is going to travel to after a pullback, right? What the Fibonacci robots like to do is they like to ideally grab their positions at one of these levels up here, right? And at this point, price hasn't made it down here yet, right? It has not made it down here, but they want to sell it at one of these extensions, right? These extensions, they're simply a mirror of these levels. You guys see that? The 0.236 is just a mirror of the 0.272, of the negative 272. The 0.382 extension. You see that? It's just a mirror. These are just profit targets. Again, a perfect Fibonacci trade is you grabbing your position at one of these levels and selling it at one of these extensions. And this happens all the time in the market. We're going to go over a couple examples here, and we're going to go over the charts, and I'll show you even more. This happens all the time. This is my favorite way to trade, using these impulsive legs and take profits on these extensions.
Right, girl.
Another thing I just noticed, let me get it real quick. Again, if you want to unmute, just go ahead and.
I'll be right back. One of the first.
How do I? Are you guys gonna unmute yourself if you have a question or you need to say something? So another thing I noticed just now, so these 786, 618.5 levels, they correspond to this supply zone, and these extensions they correspond to these major bounce areas. This is a major daily demand zone, and this is a golden zone. So you kind of see how these line up circumstantially, right? But they all kind of just work together. All right. All right, so I have some before and afters for you here. And this is actually, I think this is actually the last picture just with the candlesticks. All right. So Meta opened up, we gapped up right into the supply zone, right? And then we made this impulsive move down. So what you do is you take your Fibonacci from the top and you're just going to trace it down, trace it down, trace it down, trace it down. And you're just going to trace the price, follow the price until it starts retracing, right? So in this case, we started retracing right here. We put in this hammer. I believe this is a 3 or 5 minute. We came down, we put in this hammer, and we started retracing. Now at this point, people are probably starting to think that, okay, the downtrend on Meta is over. But really what's happening is the downtrend is continuing. All it's doing is looking for a pullback to one of these Fibonacci levels. So a Fibonacci robot and traders like you and me can go ahead and get short. We don't want to get short down here chasing these candles. We want to wait for the pullback to one of these Fibonacci levels, right? And as you can see, the first pullback, the first sell-offs, or the first resistances, are right here at the 236 level. And then same right here, and then finally right here, we get filled short for puts, right? We get filled short or we grab puts on it, right? Bam. So we got filled on these shorts right here. And our ultimate goal is to sell it down here, right? So that's exactly what happened. Let's take us through this journey. So we got filled short here at the 0.5. We say we risk, one of these Fibonacci levels as our stop loss. And we start selling off. Again, right here, here's another hammer that got filled short at the 0.5. So right here, there's 2 entries for you on the 0.5. This is a 3 minute. Yes, a 3 minute. Yeah, that was a good entry. So right here, this inverted hammer, this hammer right here at the top of the uptrend, and then this, this selling wick right here. 2 beautiful entries. And then look, here's when we start getting our pullbacks. We start getting profit taking here at the 382, 236 level. We pull back again. We're not going to assume that the sell-off is over because we start getting bought up, but we only get bought up here to the 382 level, right? And it just ends up being resistance for more of a sell-off. And then we're selling, and right here, this swing low ends up getting tested, right? It's always going to get tested, but it just falls through, and we're bam. First profit taking right here at the 272 extension right here. We come down, and right here is when this trade is over. Ultimately, the Fibonacci's are done trading at this point because they bought it here and they're selling it here. Again, you guys see how picture perfect that is? They bought it at the 0.5. They sold it at the 0.5 extension. And then I think we just rallied for the rest of the day at that point. But you see, it's just, and right here, it's just, remember where we drew this Fibonacci? We drew it from here to here. We're just trading this single impulsive way, right? Here, 0.5 fill, come down, sell it right here. And again, depending on your account size, you can sell your position here. You can have your runners, at this point, you can take your profit here, you can take your profit here. And at this point, you can set your stop at break even. It's never going to come back up there. So at this point, you can say either my stop loss is going to hit and my target's going to hit. You know, set an alert for the 0.5, take your profit. This happens all the time. This happened. I can't wait to show you guys. It happens all the time. Oh, and we're going to show you guys. So this time we're going to be focusing on the extensions. And actually, look at this right off top. Right off top, the example we just used on SPY. Let's just extend it a little bit. Okay. And just a quick reminder, we went from this opening candle to this right here. Right there. Right there. Got it? And we're just going to extend. We're just trading this single Fibonacci leg, right? This single impulsive move, right? Ideally, we get filled here at the 0.618, you know, fair value gap, all this confluence, and we just hold. And we hold, and we're just holding, and it doesn't quite make it to the 0.618, right? But right here, look where we finally start getting a rally off of. This is done trading at this point. They bought it at the 0.618 and they sold it at the 0.5. They also right here. So we catch a sell off the 0.618. We catch a buy, we catch some profit taken at the 382, come back up. Here's the 0.5. Instant rejection. Bam. And then here's the 236. You see, these just kind of act as, you know, they end up acting as resistance and support, but we never quite make it back to these golden zone levels. And then finally, right here, here's the first profit taking off right here, and probably off of here too. Here's the profit taken off these two levels right here. See that 0.5, and then probably completely out right there at the 0.5 extension. You guys see how picture perfect that is? I mean, you can't make this shit up. Again, it's just a mirror. And here, I'll show you a long example too, because this is a short example. Again, this is a short example because we're in a downtrend. The impulsive move is down. Bam. Look at that. Just picture perfect. All right, let's find a long example now. I wonder if we can use this. I wonder if we can just use this. Yeah, I think we could. Yeah, so we start making this move up, and right here, this is the first clue the market is giving you that we want to start going up. We're coming up, and we break this resistance. We're coming up, we break this resistance. We're coming up. Well, you can start drawing your fib right here. As soon as we break this resistance, this is an impulsive move because this resistance is like, it doesn't mean it's barely there. Let's extend it. Right there. Beautiful, guys. Beautiful. Again, so we draw it just from this low to this high, extend it. Look where they bought it. The pull back to the 0.5, we'll extend it. If you got your position right here, that's it. All you need to do from there on is extend your Fibonacci until you get your targets, right? 0.5, look, we start catching our sell-off at the 0.5. Obviously, we keep going for the day, but this should be the end of your trade right here. If you get filled at if you're using this strategy specifically, if you're using this strategy, the impulsive lay strategy, you need to go from the level to the extension. That's going to be your best level to go, your best profit taking level. Again, we're all human. It's going to be really hard to hold, especially for me. I'm working on it. It's very hard for me to do this, but this happens all the time. And again, let's go ahead and look at the confluence at the same time, right? So we are in a downtrend, but we're finally at the bottom of this demand zone. Huge daily demand zone, right? So now the bias should be switched long because we're bringing a downtrend. We finally hit support and we're finally breaking resistance, right? So again, 0.5, let's go long here. Bam. And again, if you go long here and you're wrong, the risk isn't that bad. The good thing about these Fibonacci legs, these impulsive moves, rather than the full range, is trading these impulsive legs, your stop loss ends up being really, really tight. You get long at 449.15, you risk 448.50. See, that's the risk is much smaller than say the full range Fibonacci, where your stop has to be really, quite a bit far away. If you just trade this, just this range right here, the range that was traded from this impulsive move. So I don't know why trading is going so slow today. Bam, you see? Now your risk is really small. That's like, so 50, it's like yeah, it's like a 25 cent, 50 cent. Yeah, it's less than $1 risk. So it's, I like that. That low risk to reward, I'm sorry, that low risk, high reward, that's my jam. That's my favorite style of trading. And let's find another one here. Honestly, here, let's say you missed this whole move. Let's say that you are a really, really safe trader and you want way more confidence and you want to see this break right here before going long. Well, that's exactly what happens here. This breaks. So let's go ahead and draw Fibonacci on this impulsive leg. From the bottom to the top here. Let's extend it. And you guys see that? So say you missed this whole move here, right? And you're a sad boy, sad girl. You're like, oh man, I guess I missed the move. But if you're a Fibonacci trader, you know that you can just draw Fibonacci on the latest swing low to the latest swing high and just catch a move. Right here, 618. Look where we got filled out perfectly. Not only that, we touched the demand zone again. So we broke out, came down. Here's a 618. Here's the demand zone retest, and off to the moon. And I don't even think, yeah, we just blasted through these levels too. So yeah, I would have taken profit way up here, but look, you could have just held this. But ultimately, yeah, you should have taken your profit here. This is why you want to take your profit fast, right? 618 to 618, that's a beautiful trade to me. But obviously you could have held it for a little bit longer, runners, this and that. But that by that time it was 12 o'clock. So right here was that's the end of the day at that point. So this move went from 9:30 in the morning to about the end of the day. This is the only move you needed for the entire day. Beautiful. Absolutely beautiful. And again, there's two entries here. You missed the 0.618 entry. See how we're kind of catching consolidation at the 236.32 level? If you miss this move, it's totally fine to go ahead and grab your position here. I personally wouldn't because it's not in a zone, but if this consolidation was happening in a zone in between these two levels, I would totally grab a long position for sure. So these levels are important too, right? They can totally help in a scalping strategy. Use them with more confidence on your side is my advice to you if you want to use those levels. But again, I primarily use them as spots where I know we're going to kind of catch resistance at. Like like right here, see these 382, 272 extensions. These are where the sell-offs start happening. These are where the profit taking starts really happening. And then they just get stuffed anyway. But yeah. So let's go back. Are there any questions before I head back to the PowerPoint? Let's see. Do you guys need any more examples of this specific thing? Of the impulsive leg? You guys all with me? Let's talk in the chat. Okay. Sounds good. Let's keep going. I wonder what's next. Oh my god. I think I skipped ahead. I skipped ahead in my charting. My bad. So I guess this will just be a review of what I just went over on the charts. Perfect. So yeah, like I just said, an impulsive move is when the stock makes a huge move to the upside or downside, and it breaks a bunch of resistance or support on its way, right? So Meta came down, and then we came back up and just broke this like it wasn't even there. So we drew a Fibonacci from the low to the high, right? I mean, put simply, I know we can call impulsive legs, but really they're just a swing low to a swing high. They're just the range you're playing. Here's the swing low, here's the swing high. You know, that's what it is in layman's terms. I look from on the 3 minute and the 5 minute. If you guys see me trade, I have the 3 minute and the 5 minute up side by side. So I'll draw them on the 3 minute, but I'll confirm them on the 5 minute to make sure, you know, that it's still an impulsive move. For you guys, I would recommend just sticking to the 5 minute when you're looking for these impulsive legs, because the 5 minute is really going to show you, you know, these stronger candles. It's going to show you more of a picture. Again, the 3 minute is just my personal choice. When you guys first start off, go to the 5 minute. Just go to the 5 minute. All right. So I think this is actually the last picture. So again, same thing. So what's
Raj,
up?
quick question. If you go to the 5 minute, then are you confirming on the 15?
I don't know. No. I don't normally go that high when I'm day trading. I do watch the other
Okay.
stocks on the 15 minute, but you can do that. Again, confirming these Fibonacci's on a higher time frame, the higher you go up, it's gonna make it even better. I'm more of like a, you know, the way I trade, it's faster. So I find mine on the 5 minute. But you can find them on the 10 minute, 15 minute, 30 minute. It's just gonna confirm your swing low and your swing high, right? It's just gonna confirm your range. Um, again, for me, 5 minute tends to work the best. So again, I have the 3 minute to the left and the 5 minute on the right, and I draw on the 3, confirm them on the 5, and it tends to work for me perfectly for my style at least of, you know, of trading. If you guys see me trade live, you know how I do it. So here's Meta. We drew the Fibonacci from the swing low to the swing high, and now it's retracing right here at the 0.786. This is looking pretty bearish, right? This does look like an impulsive move down, and I can totally see not taking calls here. But this candle ends up printing pretty bullish right on top of the 0.786. So it kind of makes sense to go ahead and risk just, you know, 281.65 to 280.68. So that's a pretty small risk. You can just take your longs here and just risk that. And if you're wrong, it's really not a big deal because you practiced really good risk management in that case. You didn't, you know, grab your longs up here. You know, you practiced good risk management and you waited for a pullback to these levels, the 0.786 specifically, because nothing really printed at the 0.5 or the 0.618. It was at the 0.786 where we started printing kind of a bullish candle. We started seeing buying happening. This wick right here on the 0.786 and this candle forming right here on top of 0.786, right? Hold on. So me personally, someone asked what I use to confirm confluence. Me personally, I'm a supply and demand trader. So my confluences are normally these zones. So this right here, not only are we basing out the 0.786, we're also basing out in my zone right here. So again, I'm never using the Fibonacci to take a trade in a random ass spot in the chart. I'm always using it to get in a really good spot. So again, right here between this demand zone and this supply zone is, I wouldn't take it in the middle. I would take it if we were up here or down here. I want to maximize my risk to reward. So that way, if I'm wrong, I can still feel, you know, I'll feel okay about being wrong because I know that I practiced really good risk management. I didn't pick a random ass spot in the chart. I picked, you know, where I had good confluence. There's probably an EMA here holding support as well. Again, you know, holding support, that's another confluence. Holding these right here. You know, you don't want to just use one trigger. You don't want to use one trigger to go long or go short. That's just not how the market works. That's why a lot of people say that's why a lot of people strategy hop. They use one strategy and it doesn't work like 2 or 3 times in a row. That's not the strategy's fault. Usually that strategy just needs more backing it up. Like a Bollinger Band strategy, you want to take it at the bottom of the Bollinger Bands, but sometimes the bottom of the Bollinger Bands can keep extending, like as the price goes down. So say now that we're at the bottom of the Bollinger Bands and we're at the bottom of the zone, now you can, that's a good risk to reward to take it long. So again, that's Confluence. And I have a video about Confluence too, if you guys want to check it out. It's in the Discord somewhere. All right, let's keep going here. So this is the before picture. Sorry, I went on a small tangent there. So let's see what happened afterwards. Again, this ends up being the only trade you needed. Remember, we just drew it from here to here. We got filled long here at the 0.786, right? And look what we start pulling back at. Again, this is why these 236, 382 levels are important. They're not super, you don't have to have them on your chart, but for me, I kind of need them on my chart because if I see a pullback, personally, I'm like, oh crap, I better take profit and just exit my position. But if I see it happening at one of these fib levels, I can expect it. We get filled long here. There's no reason to take profit here because the 236 and 382, they're just acting as resistance. And actually, we come down, and here's a second entry right here after 0.5, right? So here's 3 potential entries for you off this one impulsive leg from here to here. The 0.786, the 0.5, we could have even got in on this consolidation here. And now let's head on up. Let's go through the journey. Now, see how we're catching consolidation here at the 236, 272, 32, whatever, the extensions here, right? Because right here, there was a lot of people or a lot of robots. There were a lot of people getting filled out right here. Again, it's just a mirror. So see, right here, they were buying. Right here, they're catching resistance here because these people right here are taking profit right here at these extensions, right? And down here, the people who got filled here, they're waiting for this one right here, the 0.5. And see, the pullback off the 0.5 extension was much more severe, right? And it actually pushed us right back into demand. Again, this is another entry for me personally. We come out, break into demand, or break out of demand, come and hold demand. This is a perfect entry. So now we're coming back up. Right here, we're catching some sells, and then right here, the 786 level, from right down here, the 786 extension, to the 786 right here, this level to this extension, this called the top. We ended up selling off the rest of the day. After that, again, the only trade you needed for the whole day, if you just trade this one impulsive leg, you say 786, you take your profit, and at this point, set your stop at break even and just tell yourself, and I gotta tell myself, I'm right there with you guys. Either my stop hits or my target hits. I took my profit, now either my stop hits or my target hits. And if you use these Fibonacci extensions, these make your targets much easier. Again, it's just a lazy way of doing it. I'm all about making this trading shit super simple. That's why I use supply and demand zone. That's why I use the Fibonacci, because it does all these things automatically for me. I don't want to sit here and spend hours, marking up levels on the chart when I can draw the Fibonacci and there's my levels. I don't want to spend time doing that when I can just use the Fibonacci. Right? Oh, that's a some shot here. So I do the levels. Again, that's why I'm trying to size up, because I like to take profit off these levels. And again, I also use price action, right? I also use my knowledge of price action. I see we're starting to get, say I got filled here, and me, man, I by this off this consolidation, I would probably be out of my whole position because I'm that, I'm working on holding my runner still here, but I'm like a lot of you guys where I'm having, I can't, it's hard to hold, man. Holding a winner is much harder than holding a loser. I'm sure we've all been there. So yeah, but as you can see, the Fibonacci, it just has your back. And again, BW, I take my profit based on the levels, but also just straight price action. Like if I see like if we sold off, like the other day, I got a short position off the 0.618, and I sold it because we only sold off to like the 0.5. So it was a really weak sell-off. So I just sold it right there. instead of just like waiting. When I mean, and again, I should have just waited. Like you saw that day, I should have just waited. But you know, we're all working on it. We're all, you know, we're all in this together, just working on it, figuring it out. Again, but this is the ideal Fibonacci trade, right? Level to extension. This to me is a perfect Fibonacci trade too. If you got your position right here and sold it at these levels right here, it's fine. You know, wherever you get your position at, your ultimate goal should be to sell it at that target or that level's extension. Again, be responsible, take your profits along the way, but at a certain point, the best thing you can do for yourself is say, I'm setting my stop at break even, and either my stop hits or my target hits. And at that point, you taking your profits already, set your alerts. And again, I'm trying to tell myself, though, you know, I'm right there with you guys. You know, set your alerts, and then, you know, once it hits, take your runner off, and, you know, you're good. You just executed the perfect Fibonacci trade. All right, any questions? Oh, I got another example here. Any questions before I move on to this next example? All right, it looks
I
like.
would, oh, Raj, what I was gonna do, I was gonna highlight that on the previous screen, what you could have done, or what I'm starting to learn to do is to create a trend line on that meta one. So if you have a trend line, it actually continues to help you still stay in the trade, because if it doesn't break that large trend line going up,
I see it. Yeah, I
you
can
know,
see it
it's
in
like,
mind's eye.
you
Yeah,
see it, right? You see it?
yeah.
Yeah.
Wow. Yeah, see, again, yeah, all those things, all those conflicts will help you stay in. And we're all working on it. But yeah, that's how these extensions work. And they work beautifully. They happen all the time, especially on these impulsive legs. Instead of using the full range Fibonacci, if you just trade one impulsive leg, um, that personally is my favorite way to trade. And if you guys see me live, I will trade multiple Fibonacci impulsive legs. I'll trade this one right here. If I miss this one, I would have traded this one. I think the next slide does go over that. This is definitely something I would do. So off open, we missed the move, sad face. I know how we're all feeling here. We don't want to catch FOMO. We don't want to chase these candles. Um, so what I'm personally going to do. Actually, this is a good entry for me right here. But even say you even missed this one, like say you missed the breakout retest entry. We draw Fibonacci from the swing low, the swing high, and wait for it to start retracing. So we don't trade this impulsive leg. We're trading this new impulsive leg that was just created off this consolidation, right? Bam. So at this point, I'm just trailing my Fibonacci until we get a retracement at one of these golden zone levels, right? The 0.5, the 0.618, or the 0.786. I'm going to keep trailing this until one of these hit, and I'm going to get filled long at one of these levels, right? In this case, we get filled long at the 0.5 Fibonacci. Look at that. Picture perfect, beautiful again. Let's go through the journey. It's a small one. It's a beautiful trade. Again, we missed this whole previous move. It's fine. What we're going to do is not chase this move. We're going to draw Fibonacci from this swing low to this swing high, wait for it to retrace, 0.5 hold, demand zone hold, support hold, this bull flag right here holding. I know this is also kind of a head and shoulders pattern probably, but you know, I see those fail all the time. Head and shoulders, I get faked out by those all the time. So again, the way I look at it is I use the Fibonacci and I just look at it as a not more of a pattern, but just more as support. Like this to me is just support, and this support is holding. So from here to here, we have 3 levels of confluence. Not only that, we have a hammer right here at 0.5. And again, beautiful trade. Here is where you take your profit. By this point, since you're just trading this impulsive leg, at this point, even if the trade keeps going, to you, it doesn't matter. This strategy calls for going from level to extension, one impulsive leg, right? It's not a full range Fibonacci. You're just trading a single swing low to swing high. That's all you're trading. Once your level hits, you need a bounce. Again, it can keep going, and in that case, it's whatever, get back in. But this strategy calls for you to just trade this swing low to this swing high and get out. 0.5 to 0.5, get out. Look how picture perfect that is, man. That thing is no joke. This is beautiful. I think the next thing we're gonna hop on charts. Any questions? Any questions before I keep going? All right, it looks like we're good. Yeah, again, that is picture perfect. That is all right. I think that's actually it. Okay. Cool. I actually went through those examples on how to trade impulsive legs. I guess we can find a couple more. Let's just take another stock. I normally just trade SPY, so I just kind of stick to SPY. But let's just pick let's do Tesla. Let's do Tesla. And we're gonna be focused on impulsive leg trading. All right. Wow, what a crazy day. This day would definitely, okay. So I can see the full range one working on this as well. Just real quick, I'll show you for the example. From the swing high of the day to the swing low of the day, we catch a sell off to 0.618, right? And then second time, we catch another sell off to 786, right? Now keep these levels in mind. And in fact, what I'll actually do, let's keep these levels in mind by marking them off. So these levels are going to be the 0.5, the 0.618, and the 0.786 of the full range Fibonacci, the swing low and the swing high of the day, right? Now, this is just going to show you these are multiple Fibonacci's that just work together and battle each other all day, right? Say you don't want to go short, right? We're moving up, we're moving up. We just broke this resistance. We just broke this resistance. So let's draw Fibonacci from this swing low to this swing high. And again, this is where we sold off the 0.618. And let's extend it. Now look at that. These are multiple Fibonacci's working together. So you trace first buy off the 0.5 right here. Second buy, not only is it holding support, holding this demand zone, and putting this really bullish candle at the 618 and off to the races. All the way up. It catches a sell off the 0.786 level at the same time it caused sell off this 272 extension. Is there just the next day? So this ends up being the whole day actually. Now you guys see how you could have used two Fibonacci strategies on the same day and gotten paid both ways. The only markup fees make them a little darker. So again, these three levels are the full range Fibonacci, right? And this is just the impulsive leg. What you could have done is trade this impulsive leg and gone long on 618 and take your profits, take your profits, take your profits. And again, it never ever makes it up to the 0.618 extension. But you should, again, you take your profits responsibly and eventually your stop loss will just hit. You'll be stopped at a break even. Or you come up to the end of the day and you see we're at the end of the day, and you can just bounce, right? It's 12:55. There's no way it's going to make it to 0.5 now. You can just get out of your position, right? But off this 0.618, it just ran the entire day. But look where it ran to. The 0.786 of the previous or of the full range Fibonacci. And off this, we sell off. We actually sold off of here the very next day. So you could have grabbed a put because you see that we closed at 786 and we just gapped down. That's pretty cool. It's pretty crazy. Let's find another one. All right. So right here, this is the 630 candle on Tesla. The first thing it does is make a move up. Again, we're just gonna trade this impulsive leg, right? We're coming up, we're coming up, we're coming up. My shit's going slow. And then right here we catch our first right here we catch our first sell, and then look, right here, the 382. Some Fibonacci robot got filled off this 382. You just look where we catch our first sell off at. Right here. You see that? This is not a trade I would take because I would you know, I personally want to wait for this one. But again, this is just showing you there's multiple Fibonacci robots all out here trying to make some money. These scalping robots are out here, right? Here's the first again. Right here. We come up here. They got filled at 382. They sold at the 382. So what we're gonna do, we're gonna keep extending until we finally catch our buys. 0.5. We'll scalp here, but we ultimately catch our buys down here. We just right here, this 0.9 level. So again, you can just go low. You can go long here. You can go long at the 786 with 270s, or sorry, 0.9, and just risk this swing low. So if you went long off here, you can feel really good about it, about the risk, because you're just risking this candle right here, this candle right. Let's see, and this you can take a long position at any one of these levels actually, because the risk off this impulsive leg is so small. You're not using the full range Fibonacci. You're just using this swing low to this swing high. We can go through the journey here. Say you got filled long here, or you got filled long here at the 0.618. Again, if you don't take the 0.786 fill, don't feel bad because you also have the 618 and the 0.5. Once we're below the 0.5, we're officially at a discount. So don't feel bad if you don't get it off the 786 because you still have an entry at the 0.5 and the 0.618. So if you're more of a safe trader, if you're a less aggressive trader, you can just wait for confluence. You can wait for confirmation. Instead of being a desperado right here and risking lows, you can just wait for confluence. You can say, okay, now we're bull flagging at the 618, at the 0.5, and bam, we just keep going. Rest of the day. And these extensions, we did catch sells off them, but like this is a really strong rally by Tesla. Again, if you get yours right here, you should take your profit up here at these levels. And then just let the rest of the traders do their thing. If you're using this strategy, you get it off one of these levels, you take it to one of these levels. And that's it. All right, I think that's all I have for you guys. Again, thank you for coming and kicking it with me on a Saturday night. It's awesome. Any questions before I get out of here? I got chat open right now. All right, guys. This is a really fun one. I hope you guys found some value out of it. Again, this is kind of more of a scalping strategy because we're just trading one swing low and one swing high. But it's a massive, like it has massive profit potential. Like I personally am a scalper, but I use these Fibonacci impulsive legs to maximize the profit potential of my scalps. Because if I can take it from level to extension, then yeah, that's a scalp. But like it went huge. Yeah. So I was looking at Tesla. Yeah, Tesla is beautiful. Okay, all right, guys, I'm out of here. I'll see you guys later. Thank you again. Have a good one.
All right, thanks.